Welcome back. Today I want to look about the financial statements of a sole trader. So we are going to look at the determination of gross profit or gross loss. So for gross profit is the difference between sales proceeds of a particular period and the cost of goods actually sold. So since the gross profits means the overall profit, no deduction of any sort is made, and that is general, administrative, or selling and distribution expenses made. Then the entries, items that will appear in the income statement to ascertain this gross profit or loss, we have items to be debited and items to be credited. So for items to be debited, we are going to look at the opening stock. So this one will refer to the value of goods had at the end of a previous accounting year. Then we have the purchases. The purchases that we have made. We may have bought goods either on cash or on credit. Then we have the purchases returns or returns outward. Now we can due to some various reasons we might send back good to the suppliers. Then we have the direct expense. So these are expense incurred in connection with the purchases or the procurement of productions of goods. Okay, I hope we are together up to there. Let's continue to the items to be credited. So we shall start with the sales. So the sales of good in which business deals can include both cash and credit sales. Also we have the sale returns or the returns inwards. So goods are returned by the buyers for some reasons. Then we have the abnormal loss. This one we can refer to it as a abnormal loss due to stock, due to fire, theft, or accident. Then we also have the closing stock, which refer to the value of goods lying unsold at the end of any accounting year. So we are going to look at the trading account, its horizontal format and its vertical format. So let's start with the horizontal format. So this is the trading account horizontal format. So we shall start with the opening stock. So you have to create a T format. It looks like a T format. We have the debit side and the credit side. So we shall start with the opening stock and its value. We add the purchases. Then we also have we add the carriage inwards. And then we get the total. Then from there we can also we less the return outwards. We shall get the cost of stock available for sale. Then we less the closing stock. We get the cost of sales. Then on the right hand side we have the sales. We less the returns inward. We get the net sales. So that is how we are going to get the gross profit. The vertical format is still the same, but now you have to align them on the same side. So both these, the sales and the side of the opening stock, they have to be on the same side. So this is the mostly used format. So we shall have the sales, we less the return inwards, where we shall get the return, we shall get the net sale. Then now we add the opening stock, we have the purchases, we add the carriage inwards. Then we have to raise any return outwards, which shall help us to have the cost of stock available for sales. Then we less the closing stock. Then we shall have now the cost of sales. So the cost of sale, we are deducting it from the net of sales, so that you can get the gross profit. So that is all about the vertical format. So you can have some illustration here. We have an example. We are told from the following details, draw up a trading account of Mr. Karanja for the year ended 13 December 2010, which was his first year in business. So in his first year, Mr. Karanja, carriage inwards was 13,400, return outwards, you can see return inwards. You have the sales, purchases, and stock of good at that 1 December 2010. So this is the crossing stock. So the solution, we are going to utilize the vertical format. So we shall start with the sales less any return inwards, all that. So let's start. We have the sales. So the sales, we are told it's for 774,840. So we indicate it there. You have the rest. We less any return inwards. We are told is for 17,800, where we shall get 757,040. Then we have to less the cost of sale, which include now the purchases of 666, 660. Any carriage inwards, we are told of 13,400. We have to less any return outwards of 9,900. Crossing stock, we have been told is 149,790. So for the cost of sale, we are going to get 523.80. So we subtract from the net for the net sale. So the gross profit shall be 236,660. So that is the gross profit. Let's continue. So you have checked on the horizontal and vertical format. Now we are going to look at the determination of net profit or loss. So we shall have those items that are to be debited and those items that shall be credited. So let's start with the items that shall be debited. Now here we have things like management expense. So the expense incurred for carrying out the day-to-day administration of the business shall be debited. Then you have selling and distribution expense. So these are expenses which are incurred for selling, distribution of products, services, as the name indicates. So then you have the maintenance expense, which are expenses incurred for maintaining the fixed assets of the administrative office in good condition. Then you have the financial expense, expense incurred for arranging finances necessary for running the business. They may include interest on loan, discount on bills, brokerage, legal expense for raising loans, etc. Then you have the abnormal losses, these are losses which may arise during the accounting period. Then you have the wages and salaries. So these are earned by workers. We either pay them, otherwise we can also look at the rent, electricity, telephone expense are due to be taken into the consideration in the accounting period. So let's continue. So you also have to look at the items that we shall credit on the on our side for determination of net and net profit or losses. So we are going to start with the gross profit as we have calculated above. So we are going to credit it on the credit side. Then you also have any other incomes. So sometimes business might be generating some profit, which is not due to the sales of its goods or services. Then you have non-trading income. It may have various transactions with the bank. So we are also going to credit that. Abnormal gains. This one are arising out of sales of fixed assets. So we shall also going to credit that. So let's continue so that we can see. So we are going to look at the ascertaining the net profit and losses. How are we going to do this? And so that we can also look at the format and anything else that we might see. So you can see you have ascertaining the net profit. So we shall look at the format and see if we can be able to have an illustration at the end of it. So we shall include the name and then the title, the name, income statement of that 1st December 2010. So we are going to populate the format of finding gross profit at the start. So we shall have the sales, then we list the returning ones where we shall be able to get the net sales, and then we continue. Then we have to list the cost of sales, which we include the opening stock, the purchases, any we had any carriage inwards. Then we shall also deduct the return outwards, where we shall have now the cost of good available for sales. Then we shall also deduct the closing stock, so that now we can get the cost of sale, which we shall deduct from the net sale to get the gross profit. So this is the gross profit. Now from here we are going now to add the income. So you have discounts received, rent received, interest received, other incomes, so that you can be able to get the gross income. Then this is what we have said it is shall be credited. Then on the debited side, we shall now deduct the expenses. So we have, they can be many, so we shall take a few. We have carriage outwards, discount allowed, postage and stationery, salary and wages, rent, paint, insurance and rates, bank charges, other expenses. So the total we deduct it from the gross income, so that we can be able now to have the net profit or net loss. So that is the format. Hope we are together. We are able to take some screenshot as we learn. Okay, let's look at the illustrations. We can also pause the video and also take some screenshots. So let's go at the illustration. We are told from the foreign trade balance of P. Nyangweso, drew up a trading a profit and loss account for the year ended 30 September 2012 and a balance sheet as at that date. So here we are combining two, the profit and loss and also the balance sheet. So let's look at the trade balance. We are told we have the stock of that, the carriage outwards, carriage inwards, return inwards, outwards. So the purchases, we have the sales, salary, wages, rent, insurance, motor expense, office expense, lighting expense, general expense, premises, motor vehicle, features and fitting, debtors. You also have creditors, cash at bank, drawings, capital, all that. So we are going to look at we are going to start with the profit and loss account. So for the profit and loss account, we have the title, P. Nyangweso, Trading Profit and Account, as at 30 December, 30 September 2003. Then we have now to study the sales. He sold for 186,000. We less the returning ones, so that we can be able to get the net sales. Then you have less the cost of sales. We have the opening stocks. We also have the purchases of 118,714, carriage for 310, 100. Then you have to raise the return outwards so that you can be able to get the cost of good available for sale. We shall also deduct the closing stock so that you get the cost of sale of 112,840, which you shall deduct it from the net sales to get our gross profit of 71,110. Now in our trial balance we don't have anything to be credited, so you don't have the incomes, so you are going to go direct to the debit side where you shall deduct the expenses. So you have all these salary wages, carriage outwards, the rent, the insurance, motor expense, office expense, lighting and heating, and general expense. So a total of expense is 58,040. So we deduct it from the gross profit to get our net profit of 13,070. So that is all about the calculation of net profit and loss account. I hope we are together. You can take some screenshots as we continue. So for the balance sheet, as at that date, I have another video that I showed you how to calculate the balance sheet. So we are not going to do that for today. Let's first of all handle the profit and loss account. So let's continue. For the statement of financial position, we shall now compare the difference between trial balance and the financial position. For the trial balance, it will check arithmetic accuracy of accounts book, while the financial positions reveal the financial position of the business. Okay, another thing that we can look, trial balance document total debit balance is equal to total credit balance. For the financial position, it shows total asset is equal to total liabilities and stakeholder equity. Then trial balance prepared before income statement account preparation. Then we have for the financial position prepared after income statement account preparation. Then for trial balance doesn't contain the value of the closing stock of goods. For the financial position contains the value of the closing stock appearing on the asset side. Okay, you can also continue. Trial balance expense due but not paid at incomes due but not received do not appear. For the financial position, expense due but not paid appear on the liability side, and income due but not received appear on the asset sides. Then you also have columns are named debit and credit. For the financial position, the two sides we have the assets and the liabilities. Then on the trial balance, list of balance extracted from the ledger account. We get the balance from the ledger accounts. For the financial position, contains only balance of those accounts which represent asset and liability. Then we also, for the trial balance, contains balance of all accounts, real, normal and personal accounts. For the financial position, contains balance of only those accounts which represent assets and liabilities. So that's all about trial balance and financial positions. So we are also going to look at the preparation and presentation of statement of financial positions, the things that we need to involve ourselves with. So we are going to look at the classification of assets. So we have the non-current assets. As you can remember, in our introduction, we said we arrange them or we name them in the order of performance. Then we also have the another assets. We also have the intangible assets, uh, like the patents. And then you also have the current assets. We also remember this, we talked about the order of liquidity, which items is far from being converted into cash. Then you have liquid or quick assets. Then you have purchase assets. You also have the wasting assets, contingent assets. So all these are assets that we can classify them as on the side of the assets. And then we are going to look at the classifications of liabilities. We don't have many here, we only have the non-current liabilities or the long-term liabilities. Then we also have the current liabilities. We define this one that you have to arrange or list it in the order of payment, which is due to be paid. Then you have contingent liabilities. So we can say they may or may not be sustained by the entity depending on the outcome of the future events such as court cases. We call them the contingent liabilities. Now we are going to prepare financial position and incomplete information. So we can have this so that we can be able to create a financial position. So an incomplete record situation is whereby the accounting system fails short of the double entry. So it fails short. This may be due to lack of records at all or insufficient records that will facilitate the preparation of final accounts. Why do we have the reasons for incomplete records? So one, managers or owners may not have the skills or expertise in preparing and maintaining an accounting system. So the expertise, records and procedure, the managers may not have that. It may not be economical for the business to maintain accounting records due to the volume or nature of transactions. Small scale business may follow this. Then their records are destroyed or stolen or misplaced. Then we can also look at the approaches in preparing final accounts where there are insufficient records. So we have the first which we can use, the estimating income from the net assets, whereby profit or loss, the formula equals to closing capital minus opening capital plus drawings minus any additional capital. So let's look at the illustration so that you can be able to utilize this formula. As you can see, estimating income from the net asset. So the illustration shows that a sole trader capital position is as follows. So you have the motor vehicle, the costs, that is the depreciation. You also have the stock, debtors, bank, cash, and the total. You also have the creditors and the net assets. So he has estimated his drawing of year 2 3 at shilling 12,500. Estimate his net profit for the year. Okay, please take a screenshot for that. Okay, let's continue. For the solution, we are going to utilize the formula. The net profit is equals to closing net assets of opening net assets plus drawing minus any additional net assets. As you can see, we have a net assets or the closing net asset of 7,349. And then we also have the opening net asset of 6,938. Then we are also told we add the drawings, which you have been told is 12,500. Any additional net assets we don't have. So after calculating, we get profit and loss account for, or the net profit for 12,911. So that is our solution on estimating the income from the net assets. We can continue. Our next one is to use of ratios. So here we have gross profit margin. So when you use this ratio of gross profit margin, we can say that gross profit or sale or the selling price, gross profit you divide by sales or the selling price, you multiply by 100. So we are going to get the gross profit margin. So for the markup, you are going to the gross profit margin. You can get the gross profit, you divide by the cost of sales, or the cost price per unit, multiplied by 100. Then we also have the stock turnover, which will measure the rates of firm uses its stock to make sales or turnover. Here we have the cost of sale, you divide by average. The stock turnover, we have the cost of sale, you divide by the average stocks. For the average stocks, we are going to get it by adding opening stock plus closing stock divided by 2. So you get the average stocks. Hope we are together up to there. So if you have any question, please write it on the comment. We are going now to look at the use of cash book and bank statement. In addition, control accounts. So for the control accounts, we are going to show the steps in preparing the final accounts. Here, prepare a statement of affairs at the beginning of the period, a list of all assets and liabilities to determine the beginning capital. So you have to do that so that you can be able to determine the beginning capital. Then you have to open and post the balances and transactions to these 3 relevant accounts. So the cash book for both cash in hand and bank. You have the sale ledger control account and purchases ledger control account. Shall also make adjustments for any accruals or prepayments. Extract a list of the balances and the trial balances, and prepare the final accounts. So these are the steps in preparing the final accounts. So we can also look at the limitations of financial statements. So which are these limitations? So one, the management has a choice out of a number of accounting policy in variation of inventory, depreciation, provision of gratuity, treatment of research and development, expenditure. Another one is that there are numerous parties which are interested in the financial statements. Also, the fact that the quantitative factors translated in terms of money are the only factors which can be revealed in the statements. Another one is that great deal of effort these days is being directed towards evaluation of human resource at the disposal of undertakings. Another limitation is suffering from the great fall in the value of money. So this is all that I wanted to discuss today. Please, if you have any question, please write it below in the comments. And also, I can also have a personalized time coach you, and we learn for the better tomorrow. Okay, thank you. Bye.